everybody's ready, let's jump in here. All right, let's see. We've got quite a few people in here. Let's see who lives in the let's see who's with us today in the coldest climate. Who can beat Chicago at -2 degrees? Anybody? -2 degrees Fahrenheit. Anybody live somewhere colder than that today? Well, Montreal might do it. Okay, I lose. All right, I thought I'd win today, but anyway, I think the whole world is cold. So this is why there's so many traders in Chicago and exchanges, because there's really nothing else to do in the winter but stay inside and look at charts. All right, let me get the screen up here. Patrick, no, I do this out of my home, and I'm here in Chicago. So take a look. Can everybody see the screen okay? Very good, very good. So for those around the world that don't know, I'd be surprised if you didn't, but Walmart is probably one of the most successful companies revenue-wise around the world. Definitely in the top 3 to 5. Certainly one of the biggest, if not the biggest, retail store out there, right? Most people know Walmart. Okay. Now, I just wanted to start with this, and the rest of the session we're going to be on the live charts. So we're going to spend most of our time on live charts today. But this slide really ties right in with the presenter that was right before me. I forget his name, but I listened to the kind of the last portion of what he was talking about, and again, I missed most of it, but it sounded pretty much like he just kept saying buy low, sell high, or sell high, buy low, and with really no emotion in his voice, and I thought it was great. So before we jump in and look at charts and indicators and all this stuff, I just think it's important to spend just a couple minutes really reviewing what this is all about and how this is all done. Okay? Yeah, so Walmart may have failed in Germany, Roman. Sure, they may have failed in Germany, but what never fails is buying low and selling high. Anyone who is buying at wholesale prices and selling at retail prices is doing pretty well. The greater the distance between those wholesale and retail prices, the more profits there are. That's profit margin, right? Okay? So we know a lot of people that make money doing what you see on the right there, whether it's Walmart or whatever. Each country has their own big department store. I forget what the big one is in Japan. It's not Walmart, it's someone else. But anyway, I think you get the point there, right? Now if we look over to the left, okay? Now if we look over to the left, again, just to be real, and I'm not sitting here, I'm here for you. The only reason we come in here is to help people understand how this works and make money trading. But I feel like it's my responsibility to just spend a few minutes on the chart and items on the left and really ask the question, how many people do we know that actually make a consistent, nice living with what you see there on the left, okay? Especially in the Forex market. In the spot Forex market specifically, that is where the competition for wholesale prices, to buy at wholesale prices is strongest and to sell at retail prices is strongest, right? And that's where the trading is going to be most difficult because the rules and regulations are less tight there than anywhere else, okay? So hopefully everybody gets the point, because the more you focus on, and now if you look at everything on the left there, and we could add to that list, the more you focus on what's on the left, the more you're going to be buying high and selling low. Think of anything on that list there. Think of anything you see on the chart. The buy signals are never at wholesale prices, and the sell signals are never at retail prices, okay? Right? Most of the entries are breakout entries. Look at that head and shoulders top. Most people understand a head and shoulders top. Are you selling near the top, near retail prices? No. You're waiting for prices to drop quite a distance, and then you're selling at a neckline. And the reason the neckline there is because that's where the support is. So you're selling at wholesale prices. That's why it's a nice pattern to talk about and look at. I guess it gives you something to talk about at the dinner table. But again, it's the head and shoulders top. That's the opposite of what Walmart's doing, right? Okay. All right. So what we're going to do today is we're going to go into the live markets, and we're actually going to add one of these to the charts. And it's not that all these are just horrible. and we just want to throw them all out the window. If you're going to use an indicator, I just think it's important that you use them the right way, okay? Today we're going to focus on Bollinger Bands, all right? But we're going to use Bollinger Bands to help us trade like Walmart, all right? I mean, after all, isn't Walmart just a massive trading company? It just continues to buy low and invite people in their market to buy right, so they can sell high, okay? I would never use a moving average for anything, Milo, myself. A moving average just simply shows me the average of the prior however many candles that I want to see. I don't see how that helps me going forward, right? All right, so let me get the live charts up here, and we will take a look. Okay. 1 second. Start with the Canadian dollar, and we'll have plenty of time to look at many markets. Okay. All right, so you should be able to see the Canadian dollar. We're looking at a number of time frames here. All right. Now you can see on those top two smaller time frames. By the way, since the last time we met, here's our dollar chart. We all planned this out together, so nice job, everybody. Looking to sell the dollar or buy euros when the dollar was trading just above 81 back into this supply level. Remember last session we ended with this chart saying, if prices come back up to this level, we probably want to take it again because prices barely, traded into this level and fell pretty hard here. So nice job, everybody, on that. We kind of did that together. All right. And while we're on the dollar chart, let's just map this dollar out just so we can be clear on it going forward. We probably won't revisit it again today. So let me just get some levels on here for you, and then we'll talk through it. Okay, so let me actually, instead of getting all distracted, we'll come back to that. I'm sorry, I kind of got off track there. Let's stick with what we're talking about. So let's look at the Canadian dollar. Okay. Yeah, and again, Bollinger Bands are just another form of moving averages, right? Tape reading skills, Janetta, that's all I do. Tape reading is all I do. I don't do anything but tape reading. I just tape read through the charts, okay? That's what I've always done. That's what I'll always continue to do. And let me show you how we do that here on this chart, okay? All right, tape reading on the charts. So let's take a look at this Canadian dollar, okay? And let me get a nice. Let me just change a time frame here, and I'll show you exactly how we do this, okay? At Online Trading Academy, there's a very, very, very popular entry, and called the All-Star entry. The reason why it's called the All-Star entry is just people just really, really like it. It works really well for them. And this is in the Forex trading room, in the options trading room. Kind of started in the options trading room, and it's caught on everywhere else. So I want to walk you through it today. Okay. So looking at the 240-minute chart of the Canadian dollar that we have here, let's find our nearest supply level above current price. Okay. We're going to go with this cluster of trading here. Now, how is this tape reading? Because if you're not looking at the candles in this area that I'm showing you, in fact, let me draw the level in real quick. Then I'll walk through how this is exactly the kind of tape reading you want to be doing. There you go. And I'll refresh. All right. So how can we call this tape reading? Well, in that yellow shaded area, okay, if you're looking at the candles, you're seeing prices just trade sideways, candle after candle in a sideways trading pattern. If you're not looking at candles and just watching price, are prices changing much, or are they basically staying the same? They're basically staying the same, right? Okay. Now, all of a sudden, when this red candle starts forming and then forms, what happens on the tape? On the chart, you get a big red candle. On the tape, prices drop. Okay. Once I see that prices are trading in the same area for a while, and then there's a strong move away from that area, I know that supply and demand are out of balance at the origin of that move. I can do that by watching the tape. I can do that by watching a chart. Okay, a chart is just a colorful representation of the tape. Does everybody understand that? Does that make sense? Whoever asked that question. Okay, this is just pure tape reading, nothing else. All right. So let's see here. So the All-Star entry. Back to the All-Star entry. What the All-Star entry is It's simply combining fresh, and keyword there, fresh, supply and demand levels, in other words, market turning points, with Bollinger Bands. So instead of, all we're adding to this is, instead of just using the whole supply-demand concept, we can also add Bollinger Bands to this. So if prices rally up to this level and are piercing above the upper Bollinger Band, it just makes it a little higher probability entry. Does that make sense? Okay. All right. Yeah, Rob, that or the price of the candles. Yeah, sidebar is the price of the candles. Okay. It's all the same thing. All right. Let's see here. So again, if prices come up to this level, and let's map this out. Let's put some numbers behind this. So let's say if prices get up to 99.68, and we look at maybe a 30-minute chart here, or if we're going with a 240, I'll go with something, a closer time frame. Let's go with a 60-minute chart. Okay. So if prices get up to that level, let me just put them next to each other. Okay. There we go. So let me re-grab the chart. So if prices on the 240-minute chart get up to that supply level and they're piercing the upper band on the hourly chart, just makes it a higher probability trade, right? 99.68 on the entry, and then we'll go just less than about a handful of ticks or less above the level for a stop. Okay. All right. So again, do you need the Bollinger Bands? No, but it just makes it a little higher probability entry. Okay. Now the targets for the All-Star entry are pretty simple. Most people will use the midline of the Bollinger Band as the first target, and then the lower band as the second target. Okay. And as long as the level that you're trading at, in other words, if you're shorting at a fresh supply level or buying at a fresh demand level, as long as the level is fresh, meaning it's the first time prices are back into the level, your winning percentage should be pretty high. Okay. Now, often these are not going to produce with that entry and those two targets. It's you're not often going to get big risk reward opportunities. You're not often going to get 5, 10 to 1 opportunities. So another exit that you can add to this, a lot of people do this in the trading room, is you can make this one of the exits an opposing demand level, which is typically going to be lower than that opposing Bollinger Band. Okay. Yeah, you want prices to be really outside of that Bollinger Band and into a fresh level. Okay. You could just go with standard Bollinger Band settings for this. Now, full disclosure here, just so you know, I don't use this. I don't use the Bollinger Bands, but I do see a lot of people using them in the trading room, combining them with the levels, and they seem to really like it, do well with it. Okay. Okay. Etham, again, the candles are the tape, right? Okay. The candles is just a colorful form of the tape. All right. So one of the most important things, so someone's asking about fresh, right? Okay. That's the important thing. Make sure it's a fresh level. So here's what determines whether you have a fresh level or not. And this goes along with today's lesson or any lesson for that matter that we do here. The only way that I would call this area a fresh level, the one the Canadian dollar supply level here. Okay. And for those that are new with us, this whole supply demand concept is foreign to you. We have a lot of recorded sessions where you can pick this up. There's a ton. If you're new to this, there's a ton of information you're missing with regard to the whole supply demand concept. Okay. Yeah. So Etham. So here you go. So again, prices are trading sideways here. Then we let prices move away from the level. Now, what you want to do to make sure your winning percentage is big and your profit margins are big, are make sure that you don't even call this a level until prices move away from this level at least twice the distance of the level. I'm going to repeat that because it's so important. This does not become a supply level until prices move at least 2 times the distance away of the size of the level. So if let's call this supply level 2 points. Let's just for simplicity's sake, let's call it 2 points wide from top to bottom. This thing needs to move away at least 4 points. Okay, and then and only then does it actually even become a level. Okay, all right. Yeah, so SD, that's exactly what I'm talking about here, right? So it's a period of basing and a drop away. If you're reading the tape, that's what a tape reader would do. Okay. All right. Okay. So we call that a fresh level. All right, so we'll leave that one alone. Let's go to another market here, and we'll keep mapping these out. And I'll give you more details every time we get to a new chart. Okay. And I'll save this one, and like always, when we have our next session, we'll come back and see how we did. All right. Okay. Let me go to the next market here. Yeah, so Dan, good question there. And again, we cover that in a bunch of those recordings. It's very rule-based how we draw those lines. If we have time, I'll go over it here again, but very, very rule-based how we want to do that. So that was more of a combination of larger time frames, hourly charts, 180-minute charts, okay, or 240-minute charts, whatever that was. Now, what about the smaller time frame? What about a little day trading opportunity, right? Okay. Lately, we've been doing tons of very short-term Forex day trading. So let's take a look. Let's do a combination now of maybe this hourly chart and a little 5 or let's make it a 10-minute chart of this is dollar Swiss. Okay. Okay. Now this one's interesting because you have a couple little levels not too far above. Now if we go to the hourly chart, I'm going to draw this little area of supply just above. Okay. It's actually sitting just right here. And I'm going to go to that top part of the candle bodies here. And actually, whoever asked that one question, we can answer it in this one. Okay? So I'm going to... And again, I'll just repeat it. For those that are new to this, there's a lot of details that we're not going into today that are in a lot of those recorded sessions on either the FX Street website or Online Trading Academy website. Okay. No problem. Okay, so take a look at dollar Swiss up there. So here we've just drawn in a supply level, okay, above current price. Now the way we're drawing those lines, okay, someone asked about the lines. I can go into that here. Let me just take the Bollinger Bands off for a minute to really show you. Hopefully this will be helpful. There, that should clean the picture up for you. Okay. Janetta, let's see. Swiss, I can't repeat what you wrote there, but so you were, I got you. So you were short and you got kind of wiped out and washed out, and then it moved down. Yeah, that'll happen sometimes. We'd have to look at the kind of levels you're looking at to really help out with that. So take a look. Someone asked about how to draw the lines. It's very, very important that you know how to do that. So this is how we would draw the lines in this example. Now this isn't a perfect example, but we don't want all perfect examples. So let's first start with the bottom line. That's a crucial part. Okay. So the bottom line, if you look at this big area of basing, you might look at this and say, well, why don't you draw your bottom line down there, right? Let me capture this again. Like, why not draw the bottom line of the supply zone right there? Remember, the entry point is when prices rally back up to that level. That's when you sell short. Okay? We've gone over that trade 1,000 times in here. So why not put the line there? And why is it that our rule's having us put the line right up there? Okay? Here's why. The bottom line needs to go snug up against the candle bodies. We can cut off the wicks, and this is for the supply side. On the supply side, the bottom line can go snug up against the candle bodies, and needs to, and we can cut off the bottom wicks. Okay? Now, why is that important? It's very important because yeah. So take a look. And who asked that question? Was that Dan? Dan, was that you? I think it was. If it was, answer the questions for me, please. When you sell short, remember, a big part of what I preach and talk about is making sure you understand who is on the other side of your trade. Is it a consistently profitable trader, or is it a novice trader? All right? Here's the thing. So, Dan, would you rather, when you sell short right here, would you rather sell short to the buyer who's buying right here, or would you rather sell short to the buyer who's buying right there? Okay. In other words, which buyer is making a bigger mistake? Right? Which buyer is buying after a bigger rally in price? Which buyer is buying from you right into the meat of that supply? Does that make sense? Okay? That's why on the supply side, we cut off the bottom wicks and put the bottom line snug up against the candle bodies. Right? Does that make sense? That forces us to sell to a really foolish buyer. Okay? All right? Walmart is not on the other side of our trade there. We're trading with Walmart there, right? It reduces risk, yeah. Now, the top line, but let me ask you this. So putting your bottom line snug up against the candle bodies, that means we're selling to a buyer who's buying right into the meat of the supply, okay? Now, let's talk about spot Forex for a minute. How do you think your broker's going to feel when you push the sell button at that bottom line? How do you think they're going to feel? Not every single one of them, but most of them. Right. Why, Vader? Why, Barter? Why aren't they going to like it? Yeah, they're definitely not going to like it, but why? Because you're forcing them to buy right there. Does that make sense? Okay. Yeah, you're forcing them to buy. Okay. So what always happens to the spread when you get up to a level like that? Does it get narrow or wide? When you get to a price level where there's lots of willing supply, what's going to happen to the spread? It's going to widen out, okay? So one of the things you can do, another odds enhancer, we talk about odds enhancers a lot. Those are also in the recordings. We're not going to get into them today. But another odds enhancer in spot Forex is, look, if you're selling short at a supply level, and you see an extra wide spread, what does that mean about the levels? I mean, it's a good level or not such a good level? Okay. You're not going to like looking at the wide spread, but it's probably a good level, right? Because the broker's saying, look, you can sell short here, but it's going to cost you, right? They're going to have to price in a small little gain for themselves, right? Okay. Okay. Now, let's talk about the top line, okay? Let's talk about the top line. Top line's easy. We always put the top line at the high price in the base. Don't worry about wicks or candle bodies. Just find the top price, put the line there, and put the stop, I'd say no more than a handful of pips above that. Okay? All right? Put the stop just maybe a handful of pips above that at most. Okay? And that's because when prices were here, right, we've already determined supply exceeds demand. That's why prices fell. So this is where the sell orders are. This is where the banks, institutions, Smarty, whatever you want, it's where they have their sell orders. There's way too many. That's why prices fell away. So if we put our stop in an area where prices were not able to go, we're probably fine. Okay? And for those of you, Boyke and others that have been doing this for a while, you've probably found that your best trades, you didn't need a big, you could have cut your stop in half and you would have been fine, right? So when you find your best levels, you don't need a big stop. Okay? Okay. Let's see. Yeah, so I'm just touching the wick here, Dan, I think, unless I'm missing what you're saying, right on top. So we want to stop just above that. So that's the logic behind the lines, okay? And then, of course, on the demand side, you just flip all that information over, and I think you get it. Let's see. Let's see if there's a nice demand level below. In fact, let me blow this chart up. Okay. All right, let me see. I'm just looking back in questions here. Sorry if I missed anybody's questions. Let me just look back real quick. Yeah, SD. Here's the thing. So you're probably looking and saying, well, wait a second, that's drop-based drop, and I thought we were told to look for rally-based drop, right? Just like I'm about to focus on this rally-based rally, here's the reason why I always lead with rally-based drop and drop-based rally. Here's the reason. The reason is because if you tell a new trader, and think about this, some of you guys have been doing this for a while. If you tell a new trader to look for drop-based drop or rally-based rally, there's a good chance that they can get killed, because if you those rally-based rallies and drop-based drops are the best patterns that represent supply and demand in the right areas on the larger time frame, right? Okay? But if you find those on the wrong side of the curve, price is going to blow right through them. So a rally-based rally near larger time frame demand or far from larger time frame supply, it's great. Take it. I take them all the time. A decline-based decline near larger time frame supply and far from larger time frame demand, they're fantastic. Okay? They're great. Take them. But if you take that drop-based drop too close to larger time frame demand, good luck. Okay? Yes, so Janeda, knowing which one to take all comes down to those odds enhancers. That's the key. I can tell you, I just did a 2-day class. I've never done it before, but I did a 2-day live class. It was me with about 70 people in Singapore last week, and I could tell you, I'd say 75% of the 2-day class was just odds enhancers, a massive section on odds enhancers. And the whole point of that was to really teach people how to find the best levels and how to ignore all the others. All right? Okay, so let's take a look here. Going to draw in a couple levels right here. And just so everybody understands how to draw the lines in, let me just put these in. It'll just take me a few seconds, and then I'll just share it with you. And we'll move on to another market. Okay. And let me get rid of, one second. Okay. So I'm going to re-grab the picture. Yeah, SD, I agree with you. I'm with you there. Okay, so take a look. Okay. All right, so here we've got a couple of demand levels below current price. Okay. And if you're looking at like the daily or weekly chart, these levels are probably decent. Okay. All right. So we've got this level here. Now notice again, I'm cutting off the wicks on top, but I'm not cutting off anything on the bottom. We need at least 3 candles in that base. Okay. And we've got the same thing down here. All right. So good question. Daniel is asking about this area right here. I'm just going to draw a circle around it. Okay. There we go. Okay. So that circled area. Yeah. The only reason why I didn't point that out there. Well, actually, there's 2 reasons. Number one, first of all, I would expect prices if they came here to bounce a little bit. But the 2 reasons why I would not choose that as a level. Number one, if you look to the left, prices have just been there. We kind of rallied out of this area. Okay, the origin of this 95.50 is also the origin of this, which is right next to it. So we rallied out of there and came back, which means if this picture right here is evidence that willing demand exceeds willing supply. Sorry. So prices come back over here, some of that willing demand is absorbed, right? So not that strong of a level. But even if this was a really good level, yeah, so Patrick, yeah, we'd call that a retest. So we're only interested in taking fresh levels. Remember, fresh levels, okay? The other thing is, even if this was a fresh level, look what's sitting right above us at 9,600, okay? Now, this isn't a supply level yet, but if prices fall from this level, now it's a supply level, right? And sitting right above that is another supply level. So profit margin is an issue. So the fact that that's not really a fresh area and the fact that or too close to a pocket of supply above is why I ignored that 95.50. Again, having said that, if you're a really short-term trader, you're probably going to get a bounce there. Okay. Exactly. Got to chop the wood through that. Exactly. Okay. Someone's asking about point and figure charts. Yeah, they're fine as long as you're looking at them the right way. Yeah, absolutely. They're very suitable for what we're talking about here. Okay. They are very suitable. Okay, so those are a couple opportunities we can kind of look for going forward in dollar Swiss. They look to be decent trading opportunities. Remember, for profits, instead of taking the time in this session to draw in all the profits, you can do that on your own, but I would just make sure that there is no profit taken of less than 2 to 1. In other words, whatever you're risking, I would look for it to make at least twice what you're risking, if not more. So that's, yeah, the bigger time frames here look okay. We're in a downtrend, so that supply level looks all right. And then if you look on the daily chart down here, just below 9,400, we've got our big area of demand down here. So that makes this supply level okay, and also those two demand levels a little bit lower, all right, Mike. So that, yeah, I kind of glanced at the bigger time frame there. Okay. All right. Yeah, Paulo, you could probably go down to like a 30-minute chart if you're going to go down to the 2. We'll do that before the session is over here, okay? All right. Bill, I don't think I can't say there's any one time frame that gives you the most success, right? When you're here's the thing, and remember I showed those slides. Let me pull that up for a minute here. Hold on just a second. I want to share something with you. Bill's asking a good question. Bill, you could share that with everybody, like I kind of just did. What time frame gives you the best, the best opportunities? Let me bring something up and share this with you. Okay. This will just take a minute. And I'm going to run through this real quick just to get the point across. Okay. When should you be a short-term trader? When should you be a long-term trader? There's always short-term trading opportunities in the currencies. I took a British pound. Everybody see those British pound levels today? Those were, levels like that come up all the time. Okay, let me share this with you. That's a great question, and I'll answer it here with, yeah, correct, Paulo, absolutely. So take a look. If you remember, everybody remember the euro right here? Take a look. Remember that? Beginning of December, right? Remember the euro was coming down into that big demand level? We had that here at FX Street. We were looking at that. Okay, when the euro, big market, is coming down into a weekly demand level that is fresh, meaning this is the first time prices are coming down into this area, do you even need to look at another market that week? I mean, I'm just going to pick on this level as much as I can. So on the 29th of November, I bought it there for a short-term trade. Okay. Next day, okay, the 30th, took it again, found a little 1-minute demand level on the euro chart. Why was I so confident on this little 1-minute setup? Because of where we were at in the bigger picture. The odds were so stacked in the buyer's favor. Okay? Think about it. When I pushed the buy button here for this trade, who was I buying from? I was buying from a seller who was selling after a drop in price, mistake number 1. Selling into a price level where demand exceeds supply, mistake number 2. Selling in the context of an uptrend here, mistake number 3. And the biggest mistake of all, they were selling into larger time frame demand. That is trading suicide. Okay? So I felt that the risk reward here was ideal, and the odds were absolutely stacked in my favor. Okay? Let's keep going. Next day, December 1st. Now prices came into the level and are starting to come out of the level. At the same time, the dollar's hitting supply and falling. So let's trade this market again. Why go to any other market? The odds are stacked in our favor here. Let's keep picking on that big stack of buy orders there. Yeah, these are all done in the euro futures. Okay, these trades that you're looking at here. Okay. Next day, 4 days later, let's do it again. Any drop in price into a demand level near that larger time frame demand, the odds are so stacked in your favor, I'm not even looking at another market, right? I trade, most of the big futures markets, crude oil, gold, all of them, S&P, bonds, NASDAQ, okay, you name it. But this week, why look at anything else? The euro's into that big level, trade that, okay? Anyway, I think you get the point. Let's go back to TradeStation. So, what time frames does this work best in? When you're into larger time frame areas, focus on that market. Take day trades off that level or longer term position trades off that level. Okay? You could have taken a really nice big swing trade. That's what we planned out here at FX Street, right? Off that level. So if you took that, right? Here's what the chart looks like now. Okay. Remember, those trades may have looked good. Okay. Those trades may have looked good, but now look at the chart. Now it kind of looks foolish to day trade off that level, right? Now I look like a fool for doing that. If I'd have just bought once and hung on to it, look at the profits, right? Now we're up like what, 600 pips? Okay. So, the whole point is go to where the opportunity is, right? Daniel, yeah, good question there, and I'm glad you asked that. I don't want anyone to think that I don't have losses. I certainly have trading losses. But typically, the majority of days end up being profitable days, and the vast majority of weeks are profitable. But inside those weeks and days, because that's the question he's asking, there are certainly losing trades in there. Okay, small losses, bigger wins. And again, if you're forcing yourself to take the first pullback into levels, you're taking the highest probability trade there is. Make sure there's a profit margin associated with that, and you're good to go. Okay, and if you have the ability to follow rules, it's going to be you should do all right. Okay. Paulo, how many trades a day on average? I'm just kind of guessing here, but I'd say probably 2. Okay. Why at least 3 candles in a base, Tony? Because if you don't, if you say 1 candle, then everything kind of becomes a base. But you don't want a lot of candles because that time odds enhancer is a big one. Okay? Right. Yeah, so your risk reward needs to go up, Daniel. Okay. So what you need to do there is force yourself to only find opportunities that offer you. Here's a big thing, Daniel. So Daniel's doing fine, but he wants to increase his risk reward. So one idea is, let's say you want to make sure that you're going to get 2-to-1 out of a trade. Okay. Yeah. So psychology is part of it, but let's say you want to get 2-to-1 out of a trade. Don't look for opportunities that are offering you 2-to-1. Look for opportunities that are offering you 3-to-1 at least, and then take 2-to-1. Okay? If I want 3-to-1 out of a trade, I'm going to look for a trade that's offering me at least 4-to-1. Does that make sense? Okay? That you're going to make it so much easier on yourself. Okay? Because if you're looking for 2-to-1, if you want 2-to-1 and the chart's offering you 2-to-1, that means at that exit there's probably a lot of supply or demand, so it's going to be tough to achieve that. So make it easier on yourself. You want to make it even easier, if you're looking for 2-to-1, make sure the chart's offering 4-to-1. Okay? All right? Correct, Bill. Yeah, so exactly, Bill, you're absolutely right. So it's all relative. So if you're taking a short-term trade, you're going to be focused on smaller time frame levels. Okay? So make sure on that 2 and 5 minute chart, your bases, are anywhere from maybe 3 to 5 or 6 candles, but not much more. Okay? If you're finding a level on an hourly chart or a daily chart, same thing. Okay? But you're not planning on taking that for a handful of pips. That's a much bigger trade. Okay? Yeah, exactly. Not just for entry, Daniel, for barriers as well. Meaning those opposing areas. Okay? So let me change the chart up here, and let's take a look. we've kind of gone off in many different little tangents here, but hopefully all this information is helpful. And again, if you're new to this, you're missing so much information. So go watch those recordings. They're all free. FX Street makes all this stuff available. Imagine what the trading world would be like without FX Street. Not good. Okay, let's take a look. So I want to point one out to you here. This is a trade I took today, a very short-term trade. Okay. Let me capture the screen for you. Okay. Yes, absolutely. It's a three-part approach: FX Street, the presenters, and the audience. Absolutely. All right. And it's all working. Our little team here of presenters and audience and FX Street, it's working. People are becoming better traders. How do we know people are becoming better Forex traders? Anybody see the latest news from the NFA about the Forex market and the brokers? Anybody see that news over the past 24 hours? They're doing a really big investigation, right, into their trading practices, right? Yeah, it's a big one. It's NFA news. That's a huge regulating body. Now why would a Forex broker have to why would a Forex broker have to do anything inappropriate? Okay, because the traders are getting too good, right? If you're on the other side of your client's trades and they're getting to be better traders, if you're a broker and you're gonna. By the way, is this session recorded? I hope it's not recorded. All right, I'm gonna stop talking here. So let's get back to the chart. I'm gonna get myself in trouble. All right. So I want to focus on a couple areas today. This is a pound trade that I took today. Didn't make much money off of it. I think I made like $480 off of it. It was a tiny little trade that was plan on it doing more, but then a demand level showed up. Actually, I know it was profitable. I don't know how much money I made. I have to check. Okay. But I really want to blow this up so I can point something out to you. Okay, so here's the chart. Okay. All right, so here's our supply level. Prices drop away from that level. When prices came back here, I sold short, but the problem with this trade was, what was the problem with this trade? The trade was profitable, made money, but what was the problem? The problem is this new demand showed up right before entry, okay? Look at this little rally-based rally in the context of an uptrend. Can't ignore those, okay? So, ended up exiting on the trade prematurely there because there was some demand. So took small profits, and then the prices went up as they should. Okay. Yeah, not much. Like I said, I think it was $400 and something when I checked. But yeah, I got out because it hit this demand level. Okay. If this wasn't here, I would expect prices to come all the way down to here. All right. But then this is a great example of how this all works. Prices come up to this level and then they drop. Okay. So some of the supply here some of this supply is eaten up when I sold short here. Now when prices come back up to that level, we expect this basing because now the supply-demand equation here is becoming more in balance. So now prices shoot up. That tells us that now their demand exceeds supply. So now this rally-based rally, we can buy the first pullback. Does everybody see how that works? Okay. This is very, very similar to what we went over in that 2-day Singapore class. Okay. But again, we move our line down to right there. Does that make sense? Actually, let me draw that in. Okay, that's how it works. I'd love to say this is more complicated and there's all these tools and tricks and everything. This whole game is Walmart. It's a function of willing buyers, willing sellers, willing demand, willing supply, and that's it. Okay. Okay. Yeah, that too. Same concept there, Bill. The same thing happened to the left, exactly. All right. Okay. Just before I forget, I typed my email address in there, sseiden@tradingacademy.com. Okay, so if if you have any questions or want to send charts in, go right ahead. I'm pretty caught up with email, not 100%, but I will be shortly. Okay. JMB, if the level if that level is broken and the new pattern represents the picture that we're looking for, meets our criteria, then yes, it is a new level. Okay, absolutely. Okay. You know what, Ronnie, if you don't mind, resend it. I was overseas, and I know there was some problem with the email back here for a short period of time, but I'll look at my spam folder too. But if you could resend it today, I'll get to it right away. All right. Okay. Paulo, I would go to like a 30-minute chart there, something around that. There's no one time frame that's the magic time frame. Okay. When you look at different time frames, it's just like a doctor looking at an X-ray. Have you ever been to broken a bone or something or anything, and they've taken one X-ray? They never take one X-ray. Never happens. They always take 2 or 3, right? And when you look at those X-rays, maybe it's your elbow, right? They're taking a picture of your elbow. When you look at those 3 X-rays, those look like completely different pictures, but it's still the same elbow. Make sense? Same concept here. Okay. All right. I know we're kind of out of time here. We usually end before the top of the hour, so I don't want to take up too much of your time here. Hopefully this was helpful. And we've got a couple trades we planned out in the dollar Swiss and I think the Canadian. So we'll watch for those, and we will see you soon. We have another session coming up real soon. Thanks for spending the hour with me. I appreciate it, and believe me, really appreciate the trust that you have in me and all the presenters here at FX Street. We take this very seriously. So have a great day, everybody.